Alexander, thank you very much. It's a huge pleasure to be here. It's my first time in Minsk. I think I've had about 10 minutes to walk around, but in that time, I've already been hugely impressed, and I hope to get some more time to explore this wonderful city. I've got a rather different presentation, maybe, to the kinds that you've seen before. What I might do is I might stand up and use the mic, if that's okay. So I'm going to talk a little bit about, this session is called Shaping the Global Context. But I think in order to shape the global context, we need to understand it. And actually there have been, I think, some really fundamental changes over the past 10 to 15 years. The assumptions that we maybe made 10 to 15 years ago are in flux, are changing a little bit. And I want to explain how those changes affect the way that we're thinking. And naturally, I will try and place Brexit in the context of this scenario. So my presentation is called The Economics of Globalization and Inequality. Let's start, shall we, with a bit of background about globalization. What do we mean by it? And of course, shaping the global context, I hope you don't mind, I start with a chart that goes back at least 150 years, where we like to talk about history before we think about the future in the Foreign Office. So this chart shows you one measure of globalization, which is the share of trade in economic activity. And I've chosen my own country, the UK, simply because we have a long run of data. And I think the first thing to note is that globalization is not a new phenomenon. In fact, you can argue that globalization really starts with the age of discovery in the 15th century. But really, by the 19th century and throughout the 19th century, we saw the share of trade in UK economic activity rise to quite significant levels throughout the 19th century. And in fact, it peaked in 1913, immediately before the First World War, at about 35%. And then the 20th century came along, and frankly, the first half of the 20th century, as we all know, as you know better than anyone here, was a series of, frankly, terrible disasters, and globalization went massively into reverse. Let me just point out one fact, that we didn't reach the peak that we'd seen in 1913 in terms of trade as a percent of GDP in the UK until the mid-1970s. It took that long for globalization, if you like, to reach the sorts of heights it had in the 19th century. So one thing to say is never take globalization for granted. You know, these economic policies can have a big impact on what we think of as globalization. The other point I want to make is that actually in the second half of the 20th century, and particularly coming into the 21st century, we saw a massive increase in trade globally. Some people call this period from 1990 onwards the period of hyperglobalization. So there's a bit of context for you. What caused the hyperglobalization from 1990 onwards? A lot of things, not one single thing. But one major contributor was the desire, if you like, of countries to interact more closely through trade. And so this chart shows you that period of hyperglobalization from 1990. It's a slightly confusing chart. The green line plotted on the right-hand side shows you that share of global trade that was in the previous chart. And the blue line shows you the average tariff rate, the cost of trading, if you like, between countries. The green line is plotted on the right-hand side on a reverse scale. So even though it's going down, it's actually going up like it was in the previous chart. And what you can see is that as average tariff rates, as the cost of trading came down between countries, globalization and the rate of trade between countries rose, and rose quite sharply. And what happened during this period of hyper-globalization? Well, I'm going to say a lot of things that sound a little bit negative, but I want you to remember this chart at all times because I think it's possibly the most important chart in my presentation. In the period of globalization, during the period of hyper-globalization from 1990 to 2015 or thereabouts, by the World Bank's definition of absolute poverty, more than 1 billion people worldwide were lifted out of absolute poverty. That is probably the greatest increase in human welfare in human history. So it's important to note that globalization delivered extraordinary benefits to a large number of people that would not otherwise have benefited. And those projections are continuing into the future. So please remember that as I go through my presentation. However, it also brought with it challenges that maybe during the period of hyperglobalization we either didn't recognize or underestimated. This chart is quite a well-known chart now amongst economists. We're a very boring bunch, economists. We like to compare charts that we like. And this is probably one of the better known. It's called the elephant chart. I hope the reason for that is obvious. And what this chart shows you, plotted along the horizontal axis, are percentiles of global income. So on the left-hand side, you start with the 0 to 10% poorest people in the world, followed by the 10 to 20th percentile, 20th to 30th, etc., until you get to the 90 to 100th richest people in the world. And then what the red line shows you is what the how much the income of those percentiles of people went up in the period of hyperglobalization, i.e. from about 1990 onwards. So this chart shows you who are the global winners and losers from globalization. So who are the winners? Well, it's clear that between, say, roughly the 10th percentile and maybe the 65th percentile, global real incomes rose by about 65% over that 25-year period. That's the global middle class, if you like. Primarily, frankly, these are people in countries like China and India, but the global middle class did very well. Their incomes went up a lot. The other people whose incomes went up very lot were essentially the very rich, the very, very top few percentiles. Rich people in rich countries did pretty well. On the right-hand side of the chart, you can see their incomes went up a lot. Who did not so well? Well, clearly the very poorest. The very, very poorest saw their real incomes shrink. So that, I think, is still a very strong case for international aid. And that's something the UK Foreign Office is still very, very involved with. But also, interestingly, around about the sort of 80th percentile, so these by global standards are relatively rich people, but they tend to be the relatively poor people in rich countries. These people tended to do not so well, actually saw their real incomes shrink. So I think this chart kind of summarizes what some of the byproducts of globalization that we may have underestimated during the period of globalization were. This chart is not uncontroversial. You can change some of the components of it and it will change the shape of it quite importantly. But I like it because it tells a very compelling story. And then, of course, while all this was happening, while this, if you like, on the one hand, fantastic poverty reduction was taking place, but on the other hand, a big redistribution of income and wealth around the world. In 2007 and 2008, we then moved into the financial crisis. I think this is an extraordinary period. It's a 1 in every 70-year type economic event, and we are living with the social and political consequences of the financial crisis to this day. What this chart shows you is US GDP, real GDP. I've just picked the US, but the chart would look very similar in other countries. And it shows you GDP since 1960 in real terms, adjusted for inflation. And you can see that I put a trend line through that GDP. That trend line grows at roughly 2.5% to 3% every year. And what you can see from 1960 is that there are ups and downs. You know, you move around this trend line, there are recessions, but there are periods in which you grow more slowly, then more quickly, but ultimately you come back to that trend line. However, from 2007, that has not happened. We saw a huge recession, we've begun to grow, but the gap between where we might expect to have been by this stage and where we are is still enormous. In the US, it's about 8% of GDP. In other countries, it's bigger than that. In my own country, in the UK, it's about 12%. So if people who have made plans on the back of expecting growth of 2.5% on average throughout their lifetimes are now finding that they're between 7 and 10% behind schedule. And that is a big deal. That has big economic and social consequences. And we need to bear that in mind whenever we are either giving advice or trying to formulate policy in our own countries. So, as I said, this has social and political consequences. Let's think about some sort of immediate impacts on capital and labour. Well, what you've seen since 1960 is a generalised fall in the share of income going to labour in a number of different countries. It's a common phenomenon across the West. At the same time, this chart shows you that actually for US median workers in the middle of the income distribution in the US, real incomes haven't really gone up very much in the space of, well, almost 50 years. Well, more than 50 years. So the green line there at the top shows you what the real hourly rate of income is for the worker in the middle of the income distribution in the US. And frankly, it hasn't gone up a lot. And this isn't unprecedented. Forgive me if I refer to history again. I'm taking you back now to the first phase of globalization, to the 18th and 19th century in the UK. And what you can see is that on the one hand, generally we think of as technological progress happens, productivity growth picks up, and as productivity growth picks up, wage growth picks up with it. And that as a long-term phenomenon is true. However, you can go through long periods in which the relationship between productivity growth and wage growth breaks down. We see that in the left-hand chart between 1800 and 1830. The UK economy saw a lot of productivity growth, but not a lot of wage growth. And on the right-hand chart, you can see how, in fact, for long periods of time, the relationship between real wages and actual economic growth have not always been consistent. So it's important to remember that things don't always go in a straight line, and this 10-year period, I think, has reminded us of that. Global capital flows have not returned to their pre-crisis levels. If you look in 2002, 2004, the period of hyperglobalization, it's not just trade, but the flow of capital between countries that was enormous. That went into reverse during the financial crisis, and it has not recovered to pre-crisis levels. So all countries to some degree, I know we're talking about investment in Belarus, but all countries to some degree have a capital flow, shortage. There are social and political consequences of all of this that we need to take account of, both in the West, but in countries that are modernizing as well. The share of manufacturing in the old industries, if you like, in the West, have systematically declined everywhere. This chart shows you what the share of manufacturing is in most Western and other economies. It's below 20%, generally speaking below a fifth of the economy, and has shrunk, if you look relative to the green dot, has shrunk significantly since 1990. There are interesting potential issues to do with this is a controversial chart, but I'll go through it anyway. On the left-hand side, how am I doing for time? Am I okay? So on the left-hand side, shows you that in US industry, the gap between essentially male and female earnings in manufacturing industry. And generally, you'll see that as the share of employment in manufacturing goes up, the male-female income gap goes up as well. That's not true in non-manufacturing. As the share of employment in non-manufacturing goes up, there isn't a gap between male and female earnings. Now, I'm not drawing any conclusions other than to say, this maybe has had an impact on if you like, the traditional, the decline of manufacturing has had a big social impact on the traditional model of single male worker working in heavy industry in the US, bringing home, if you like, the family finances. And of course, that's coincided with a good thing, which is a rise in female participation in the labor force in the US. And that is a good thing, although interestingly, and it's the blue line, this chart shows you the rise in female participation since 1950. In 1950, it used to be about a third of women worked in the labor force. Now it's well over half. And in fact, it's kind of flattened off since 2000. However, the male share has generally been declining. And this might have something to do with the change in that social model, if you like, that I was talking about. So economics has real social consequences. There's also a link between inequality and the level of social mobility across countries. So the left-hand chart shows you here a measure on the horizontal axis of social mobility. I won't bore you with the details, but generally speaking, the further to the left you are, the more socially mobile your societies are. Further to the right, the less socially mobile they are. And you can see that inequality is measured on the left-hand scale. The further up that scale, the more equal your society tends to be. So generally speaking, the more socially mobile the country you are, the more equal it tends to be the country you are as well. And then the right-hand chart shows you the degree of social mobility in the US. And it shows the probability that you'll earn a certain amount of money given what your parents earn. And some people in the US talk about the revival of the Great Gatsby culture. I don't know if you know that novel, but the Gilded Age in the 1920s, when it was supposed to be that only if you were rich, born of rich parents, would you be able to become rich in the future. That disappeared in the 1940s and 50s and 60s with the rise of the American dream, but the fear is that it's coming back. So the green lines show you that if your parents earn relatively low amounts of money, then the probability that you'll earn quite low amounts of money is quite high. And these are social concerns we need to take into account. And finally, I'm going to finish on the social side with possibly the most disturbing chart of all, which is that the rise in mortality rates in one particular section of US society on the left-hand side is quite extraordinary. That red chart shows you the mortality rates of 50 to 54-year-olds amongst US whites. And it's risen quite dramatically. It hasn't risen anywhere near as dramatically in other countries or even amongst other sections of the US population as the right-hand chart shows you. This is to do with what President Trump calls the opioid epidemic, but it shows you that there are real social and issues that we need to be worried about when we're talking about the period of globalization. Now, look, I focused on the negatives. I focus on the negatives here because, it's important to do that. I think it's important as economists to say that we don't understand everything, and we maybe need to think about how we shape our policies going on in the future. But the key thing I want you to remember is that the UK government, we still believe in globalization. We still believe in the liberal economic market model. We still believe it's the best way to deliver prosperity to most people, and that's why I started with the chart that I did. However, we recognize that it has to come with a degree social policy, that inclusiveness that ensures that some of these problems aren't repeated elsewhere. So, political consequences, well, because of some of the charts I've shown you, experts, like, the people we've talked to here, experts generally say what I've just said, that globalization is still a very, very good thing. But people aren't listening to experts as much as they used to. And if you look in the US, a large number of people don't buy into the globalization view that I've just expressed. And of course, that's been reflected, I think, in real political outcomes in terms of the most recent election. Experts generally think globalization is a good thing. Not so true of at least a large chunk of the US population. But the same is not true of Brexit. So some people tend to lump Brexit in with the election of Donald Trump and the rejection of globalization. One of the main things I want to tell you is that is not true. The British people did not vote to leave the EU because they were turning their back on the rest of the world. And these charts, I'm sorry, it's very difficult to read. I won't ask you to look at all the detail. But essentially, when you poll people and ask them why they voted to leave the EU, it was not a vote to turn its back or turn our backs on the world. Largely speaking, it was a vote about what people define as popular sovereignty. The largest reason, even ahead of things like immigration or economic performance, the largest reason was that people felt that they ought to be able to take back control of the laws that they were making. So sometimes you will hear people draw a parallel between what happens in the US and what happened with Brexit. I don't think it's quite as simple as that. And actually you see that in real political outcomes as well. What I've done here is I've shown you the vote share for what you might describe, this is slightly subjective, but the vote share for what you might describe as hard right or hard left parties in the last elections, in the most recent election. And actually, if you look at the UK, we've surprisingly gone back to a sort of two-party system that we haven't actually had for quite some time, whereas other countries have seen a move into the extremes, although that isn't always reflected in governmental outcomes. And then finally, my final few charts, I just want to say something about global Britain, because I've given you, in places, a rather sort of negative view of globalization, but I want to stress that the UK, at least, remains an outward-looking global country. We're interested in everywhere. One of the reasons I'm here is to ensure that relationships post our exit from the EU remain firm and friendly and strong. The UK remains a very open country in terms of trade. We're right in the middle of the block, if you like, in terms of our percent of trade in GDP. Even more so in terms of investment. If you look at the stock of investment, both in terms of the assets, i.e. the amount of money we invest abroad, but also the amount of money invested in our country, we're quite significantly larger than a number of countries. We're about 5 to 6 times almost leveraged, if you like. Most other major countries are significantly lower than that. So the UK as an investment source, but an investment destination, is still very, very open, and we will remain so. And of course, one of our great strengths, we think, is our education system. And despite a lot of the concerns surrounding Brexit, the intention is to remain open, especially to students. So look, I'm not going to crow about this chart too much, but the main message to take away is that there's a very strong and robust education base in the UK, which we intend to keep going. So look, let me summarize. I think the summary I want to make, I won't go through all these, I've taken up my time, but the point is that globalization is, broadly speaking, a good thing. Global Britain is very, very much part of a belief in globalization. But we also have to recognize that actually the events of since the financial crisis have shown us, and before the financial crisis, have shown us that there are important challenges that globalizing countries, but also those countries that have globalized, have to take into account. And essentially, they come under the headline of social inclusion. I've also made the point that there are important social and political consequences, but that ultimately there is a difference between what's happened in the UK and maybe what's happened in the US and in other sort of populist movements. And that finally, Global Britain means we're not turning our back on the world. We remain a very open country, and we intend to stay so. That's one of the main reasons I'm here, and I'm really looking forward to chatting to some of you and discussing some of these issues afterwards. I hope that's okay in terms of time.